Picture this. You wake up one morning and, in the blink of an eye, TikTok, the app that has redefined how hundreds of millions worldwide connect, laugh, and share, has vanished from your phone. No warning, no countdown, just gone. What sounds like the plot of a dystopian tech thriller is, in fact, a very real possibility hanging over the heads of American users, creators, and investors. This is not just about lip-syncing teens or viral dance crazes. The battle over TikTok is a microcosm of today's most urgent questions. Who controls the digital public square? How do nations safeguard their data? And what happens when technological innovation collides head-on with geopolitics and national security? As the clock ticks down on a government-imposed deadline, the world is watching a high-stakes chess match between Washington, Beijing, and some of the planet's most powerful investors, a contest that could reshape the global digital economy for decades to come. Let's rewind the tape to see exactly how we arrived at this historic crossroads. TikTok is the international face of Douyin, owned by the Chinese tech giant ByteDance. Since its launch, TikTok has experienced explosive growth, captivating well over 150 million monthly active users in the United States alone. That is nearly half the American population scrolling, watching, and creating content on a single, foreign-owned platform. This meteoric rise raised eyebrows in Washington. Was TikTok just harmless fun, or was it a potential Trojan horse, an engine for Chinese influence, data collection, and even subtle manipulation over American culture and opinions? The drama truly ignited in the summer of 2020, when then-President Donald Trump issued an ultimatum. ByteDance must sell TikTok's American operations to a U.S.-approved buyer, or the app would be banned outright. The reasoning? National security concerns, especially fears that the Chinese government could compel ByteDance to hand over sensitive user data or manipulate the content algorithm to sway American politics and society. This was not just political posturing. It was rooted in genuine anxieties about how much of modern life unfolds on our screens and who ultimately holds the levers of control. The scramble that followed was both chaotic and revealing. American corporate giants lined up, each hoping to snag a piece of the TikTok juggernaut. Oracle, with its deep expertise in cloud computing and data infrastructure, was seen as a potential safe harbor. Walmart, BlackRock, and venture capital titans like Andreessen Horowitz all put their hats in the ring. Behind the scenes, legal and diplomatic hurdles multiplied. New Chinese export control laws were hastily enacted, requiring government approval before any sale of TikTok's algorithm or source code. TikTok's massive American user base, fiercely loyal and politically active, threatened lawsuits and organized social media campaigns to resist a ban. The U.S. election cycle added even more unpredictability, with each candidate trying to out-tough the other on China. Fast forward to 2024, and the stakes have risen even further. Congress passed a sweeping law. ByteDance must divest its American TikTok assets by January 19th, or the app faces a total U.S. ban. President Trump, returning to the spotlight, has since issued not one, not two, but 3 extensions, with the latest pushing the deadline to September 17th. Trump has repeatedly claimed, "We have a buyer for TikTok," teasing the involvement of a mysterious group of very wealthy people, but only if China gives its blessing. The Chinese government, for its part, has signaled deep reluctance to approve any deal that would include TikTok's core algorithm, which they regard as a crown jewel of Chinese technological innovation. So, why all the fuss about an algorithm? To understand this, consider that TikTok's success is not just about quirky videos or clever filters. It is the algorithm, the secret recipe, that powers TikTok's uncanny ability to surface exactly the content you want to see, keeping users engaged for hours on end. This code is the beating heart of TikTok, representing years of research in artificial intelligence, machine learning, and user behavior analysis. For China, letting go of this asset is akin to selling a national treasure. For the United States, gaining control, or at least securing transparency over the algorithm, is seen as a non-negotiable requirement for national security. Negotiations have stalled. Potential buyers who once talked confidently about their plans have gone silent, wary of the diplomatic minefield. Speculation is swirling that a new hybrid entity, sometimes called TikTok America, might emerge, with half of the company owned by a consortium of American investors like Oracle, BlackRock, and Andreessen Horowitz, and ByteDance retaining just under 1/5 of the shares. But in every scenario, the same nearly impossible question lingers. Is there any deal that can simultaneously satisfy Washington's insistence on airtight security and Beijing's refusal to surrender its technological crown jewel? As the September deadline looms, the entire world is watching. This is not just a business dispute. It is a test case for the digital era. How do countries protect their citizens' data while still participating in a globalized internet? What happens when the world's leading power and its top economic rival both want control over the same technology? Never before has a single app become such a flashpoint for the future of international tech regulation, cross-border investment, and digital sovereignty. First, there is the deal scenario. In this outcome, American technology giants like Oracle and BlackRock swoop in to take a controlling stake in TikTok's U.S. operations. ByteDance, under pressure from both sides, might agree to keep a minority holding, less than 1/5, while the majority sits firmly in American hands. This could appease lawmakers in Washington, especially if the new entity is run by an independent American management team with strict oversight and transparent data practices. But this scenario hinges entirely on Beijing's willingness to let go of the algorithm. If China says no, the deal is dead in the water. Third, there is the legal gray zone. Even if a ban is announced, the reality is often much messier. Tech companies are notorious for using the courts to buy time, and TikTok's parent company is no exception. Legal challenges could drag on for months, even years, as lawyers debate the constitutionality of the ban, the scope of executive power, and the rights of users and investors. During this period, TikTok could continue operating in a kind of limbo, much like previous controversial apps such as WeChat or Huawei's US operations. For investors, this uncertainty would be a nightmare, with valuations swinging wildly based on each court ruling or political statement. Finally, there is the compromise scenario. Here, TikTok might be allowed to remain in the US market, but under a strict regime of independent audits, data firewalls, and regular government check-ins. Imagine a Silicon Valley meets Capitol Hill experiment. External auditors poring over code, government-appointed overseers scrutinizing data flows, and American regulators wielding real-time veto power over changes to the algorithm. This could serve as a model for future tech governance, an uneasy truce between innovation and oversight. But the implications go far beyond TikTok itself. If a ban is enforced, it will send shockwaves through the global tech industry. Companies from Europe to Asia will see that cross-border data and digital influence are now battlegrounds, not just business opportunities. Expect a wave of copycat legislation as countries scramble to control the algorithms shaping their societies. The very idea of a global internet, once considered inevitable, could fracture into competing national or regional networks, a phenomenon experts call the splinternet. Let's look back for a moment at historical parallels. Think of the 20th century battles over oil, steel, and semiconductors. Each was a defining resource for its era, controlled by a handful of countries and companies, fiercely guarded, and often the cause of international tension. Today, data and algorithms are playing the same role. Whoever controls the flow of information and the logic of recommendation engines shapes not just economies, but culture, politics, and even the contours of democracy itself. TikTok is simply the first and perhaps most visible battleground in this new era of digital geopolitics. Expert opinions on the issue are as divided as the governments themselves. Ryan Calo, a law professor at the University of Washington, warns that the Trump administration's willingness to bypass traditional legal frameworks sets a dangerous precedent, undermining checks and balances in the rush to address new security threats. Senator Mark Warner, vice chairman of the Senate Intelligence Committee, has repeatedly critiqued the White House, arguing that failing to act decisively on TikTok risks turning a blind eye to real vulnerabilities in America's digital defenses. Meanwhile, Chinese officials, led by Liu Pengyu, insist that any action taken must align with China's own laws and regulations, reiterating Beijing's resolve to protect its technological assets. For American investors, the situation is a double-edged sword. On one hand, a successful deal could mean a windfall, cementing their role in one of the world's most valuable digital ecosystems. On the other hand, continued uncertainty is a recipe for lost value, missed opportunities, and a chilling effect on future cross-border tech investment. Venture capitalists and institutional investors, including those from powerhouse firms like BlackRock and Andreessen Horowitz, are watching the clock with growing anxiety, knowing that missed deadlines or political missteps could render their stakes worthless overnight. For content creators, the risks are even more personal. Imagine you have spent years building a following of millions, only to wake up and find your audience gone. Already, many influencers are hedging their bets, diversifying their presence across platforms like YouTube, Instagram, and emerging sites like Triller or Lemonade. Some are even building their own direct-to-fan businesses, using newsletters, podcasts, and web shops to stay connected regardless of platform politics. It's a powerful reminder. In the digital age, your audience and your brand are your most valuable assets. Never assume a single app or network is safe from geopolitical storms. For everyday users, the lesson is equally clear. Your data, your preferences, your voice online, they are now the currency of global negotiations. Every time you share a video, comment on a post, or follow a trend, you are participating in a much larger conversation about who shapes the future of the internet. Stay informed. Be mindful of where your information is stored and who has access to it. Consider using privacy tools, multi-factor authentication, and keeping an eye on the terms of service for every platform you use. The TikTok saga also raises thorny questions about censorship and freedom of expression. Critics of a ban argue that it could set a dangerous precedent for government interference in digital speech, undermining the First Amendment and chilling creativity. Supporters counter that the national security risks are too great to ignore, and that democratic societies have a responsibility to protect the integrity of their information ecosystems. The debate is likely to intensify as the deadline approaches, with courtrooms and congressional hearings becoming the next battlegrounds for the future of digital rights. The international implications are equally profound. If the United States successfully compels ByteDance to divest TikTok, countries like India, where TikTok has already been banned on national security grounds, may feel vindicated, encouraging others to follow suit. Meanwhile, China could retaliate with its own restrictions on American tech firms, further escalating the ongoing tech Cold War. The outcome of the TikTok dispute may well set the template for how the world's major economies engage with each other's digital champions, from Alibaba to Meta to Samsung. So, what does all this mean for you, the viewer? First, recognize that the technology landscape is shifting beneath our feet. The apps and platforms we take for granted today may not be here tomorrow. If you are an influencer, entrepreneur, or investor, pay close attention to trends in digital regulation, data governance, and cross-border ownership. Diversify your digital presence, build communities across multiple platforms, and develop direct relationships with your audience. In a world where the rules can change overnight, flexibility and resilience are your best defenses. Finally, remember that your voice matters. Politicians, regulators, and CEOs pay attention to public opinion, especially when millions speak up. Whether you support a deal, oppose a ban, or simply want more transparency, do not be afraid to make your voice heard. Share your thoughts, engage in the debate, and hold leaders accountable for the decisions that will shape not just TikTok, but the entire digital world. And here is a secret that most people overlook. The real power may not lie solely with politicians or CEOs, but with users like you. Every time you log in, create content, or share a video, you add value to these platforms. In this new era of digital sovereignty, your choices and actions can help shape the destiny of the platforms you love. If you found this deep dive valuable, make sure to subscribe for more explorations into the forces shaping our technological and economic future. What would you do if TikTok disappeared tomorrow? Let us know